Good morning, traders. It is 8:04 a.m. Chicago time on Monday, the 27th of March, 2023, the last Monday of the month of March. This is episode number 2437. Can you give me a mic check, please? I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, I'm going to be working from home. My daughter's got a stomach bug, and so I'm the caretaker. So I may get interrupted here. If I do, I'll let you know, and I'll drop off. Here's the Convergent Trading pre-market summary sheet. This morning, mild risk on sentiment, especially from Europe, popping higher. There's been some news on the banks this weekend. First Citizens agrees to acquire Silicon Valley Bank. Remember, nobody wanted to take this bank on this weekend, since this situation happened about a week and a half ago. U.S. authorities considering expansion of an emergency bank lending facility in an effort to give First Republic more time to shore up its balance sheet. Credit Suisse facing threat of potential probe and disciplinary action over how top managers ran the bank leading up to its collapse. Fed's Kashkari says the recent bank turmoil increases the risk of U.S. recession, and then the German IFO is higher than expected, sees less chance of a winter recession. This week, there's a lot here. Let me look at the IFO. The IFO came in at 93.3 versus 91 expected, prior 91.1. So yeah, pretty strong. Looking at the week ahead, we have GfK, consumer confidence on Wednesday, the inflation rate out of Germany on Thursday, NBS manufacturing PMI on Thursday as well, and then Friday has the key number for the week for the Fed, which is the PCE. Friday has inflation rate out of France, Eurozone, and then the U.S. PCE, and then personal income, personal spending. That's what's ahead. Today doesn't have too much going on for it. The S&P has been balanced so far. It's balanced with an upward skew. Has nicely retested the prior settlement from Friday, which happened to be at 4,000. We'll talk about that in a minute. The volume is quite normal today compared to the last 252 days of volume. The inventory is 94% long, so the market's quite long so far from a volume perspective. And the range is 36 points, which is in line with what we expect. So relatively normal Monday. That's important to note. I want to bring your attention to these rotations. They've all expanded higher. When you add in last week's actions, the rotations have expanded higher, which means wider stops, wider targets are likely to be necessary to stay in a trade. It makes no sense to continue to use a 2-point stop when, for example, volatility has caused the rotations to double. For example, you just end up getting stopped out a lot. Let's take a look at what happened here on Friday. So Friday, if you recall, if you were here, my view was bearish. My view was we finished very weak on the FOMC. The next day, Thursday, we opened. We tested the point of control of the FOMC and went all the way down through, took out the FOMC low, and finished at the lower end of the range on a neutral trade. And so Friday was expected to come in, test higher, pull back higher, potentially to 39.95 or so, and then the expectation is we're likely to roll over and look for 39.20 below. 39.20 below, and that's just going with the range and with the fact that 39.70 right here, 39.70 is above us. So I expected resistance and I expected it to rotate over, which was completely incorrect. It's one of those things. The idea is not, again, I want to emphasize, the idea is not to foretell the market, foretell the future, and then trade what I foretold and then, feel like I'm magical and have figured it out. The idea is to have a plan while answering the last question of the 4 questions we always ask to establish context, which is what is it most likely? Most likely. So it's a probabilistic statement. These lines that I draw on here are probabilistic. What is it most likely to do as a result of the answers to the prior 3 questions? The 3 questions are: what has it done? What is it trying to do? How good of a job is it doing in doing that? And then that leads into what is most likely to happen next, and that creates a scenario. So the second scenario was pullback, shallow pullback, 39.50, squeeze to 400, and I squeeze not 495 is what I put on the screen. Squeeze to 95, it went to 4,000. But I wasn't here to trade that. So this is what it has done so far. This is this morning. So you could see Friday. One of the key things you want to take away from Friday is this multi-distribution profile. So Friday we spent a fair amount of time where the overnight session was. So the overnight session's key value is down here. We spent quite a bit of it there. We opened, we fell off. The expectation is we would take out the overnight low. Look at how close we were. 2 ticks from the overnight low. There was a short early in the morning that I talked about in the Convergence Trading Mavens channel as it happened, just to narrate that trade. And there was a short, and then it ended up stopping just 2 ticks ahead of the overnight low stat, or the overnight stat. Those of you who are not familiar, the overnight stat is a historical probability that says historically over a large number of trades, anywhere between 750 something on our market stats report sheet, a convergent to 2,500 days, which is 10 years, the historical probability of the overnight high or the overnight low being touched, not breached, touched, at least touched, is something like 97-98%. So I'm looking for that 98% to be fulfilled down here, and it just didn't do it. And then we got an impulse up, squeezing us out of the trade, and then pull back to the prior low a day right here, and we get into this awful mess, at which point I had to stop trading. I had other commitments, and then we finally get an impulse with a nice pullback to the mid right here, and then it comes back, nice pullback to the IB, and then it squeezes into the close. Again, I wasn't here for that. The delta was positive through most of the session on Friday, so we knew that it's very likely to close above the open. And there was quite a bit of support. So the market essentially poked underneath 39.50 right here, and it just didn't look back. So with that close, and it's not a neutral extreme close or anything like that, with that close, what that means, I feel like there's clicking on the mic, right? Is there like a puffing on the mic? With that close, the way it closed on Friday, it closed on the extreme. And quite a bit went off at the close here. This is quite bullish. So the expectation on Sunday is it's likely to open and push higher. And it did. It pushed higher. This is very typical of the auction. Remember, just because the market closed doesn't tell us that we found the opposite side. And the job of the market is to move directionally until it finds the other side. Okay, until it finds the other side. So the market will move down to attract buyers. The market will move up to attract sellers. And just because we closed, we can see how it finished strong. It finished almost on the high tick at 3 o'clock Central, 4 Eastern. It finished on a high tick, and immediately to you as a trader who understands the auction and has the narrative and the context in play in mind, immediately you know, hey, this doesn't look like a market to me that naturally found its sellers. So this is why the expectation to go higher, because the job is not done even though the exchange closed. The job is not done. So we expect it to continue higher. Then it found its sellers up here, pulled back. It really found its sellers up here. You can see another try here, lower high, and then it comes back to settlement before the European opens, and Europe has been quite bullish today, and it just runs right up, and it's been holding steady at the upper end of the range. Overall, other than this spike down right here, what we have overnight is a very, very balanced profile. The mid, unfortunately, got dragged down by this spike down here on the open, but had it not been for that, the full session VWAP and full session mid and the overnight point of control would have been on top of the 40-20, and the 40-20 is key. 40-20 is a big area, very important area. This zone between 40-20 right here, 40-20 and 40-25 is our magnet, in the S&P. This is an area of balance. Let me show you that on this chart here again. Look at that. This is RTH only, ES. Okay, so we're not including the overnight session. Here's the 4,000, well-battled area. 4,000's been battled over and over and over, multiple days, right? And we finished above, so we expect the market to pull back, retest this, and push higher, and it did so. That trade was stolen in the overnight session. And where do we go? We go right to the point of control of this zone, which basically takes into account the last swing high to the last swing low. We're creating somewhat by selecting it on the screen here. We're creating this, we have this most accepted price, and this is exactly where we're trading. We're trading at 40.26 right on top of this white line, which is the MC point of control. So the market has accomplished balance. Another thing is, it's above the 39.70, folks. It's above this 39.70 area, right? 39.70, 39.70. So you could see the symmetry of the market. You can see how the market's kind of repeating. Market has memory and how it repeats itself, and this is how we intend to profit from the market in its repetitious behavior. So we see the 4,000 here playing, you know, there, right here, and then on Friday. So we expect this to act as support. And now what the market is saying is, hey, we've moved from the lower balance, which had a high of 39.70. We did form an upper balance much earlier in the month. We formed another upper balance in the just recently in the last couple of weeks with the FOMC and so on. And we've crossed the line. This is quite bullish. So there are quite a few buyers below the 39.50 on Friday. There's quite a bit of lifting going on below 39.50, and it really squeezed the market higher. So I expect that squeeze to continue. And now the most important thing I want you to know is that we have a balanced overnight session. We're on top of the full session VWAP, and we're on top of the MC point of control. Expect a turbulent open. Expect a turbulent open. So all of what I said here in the last 7 or 8 minutes here in the S&P is to warn you that the open is likely to have two-way action. Why two-way action? Because this is balanced. This is the price that the market loves the most in this region. So it's an advantageous price for someone to come in and sell 50, 100, 150,000 contracts, because that's what they have to do. But it's also advantageous for somebody to come in to buy 50, 100, 150,000 contracts because it's the best price to do it. It's value. It's the price of milk is the way where it's been accepted in the past, so commerce occurs. When it starts to move away too high, price of milk starts to as price of milk starts moving higher, fewer and fewer people buy it because they find alternatives and volume goes down. As it goes lower, fewer and fewer sellers want to sell it because it's not to their advantage to go out, milk their cows, package the milk, send it to the store because it's just too cheap. It's not worth it. So they may go and make almond milk or soy milk or oat milk or whatever else, right? Find alternatives. So think of that's the auction in its rawest form. Okay, so that's that. Let's look at the TPO detail chart. Now, with this TPO detail chart, because we have an overlap here, we're going to marry these together to see what we've got to deal with right now. So this overlaps this. This brings us back to this profile. So guess what? This gets married back. This gets married back. Well, actually, it doesn't get married back. So what we have here is a market that has moved back into this profile's range and point of control. That's where microcomposite comes from. And it's moved back to where we were before the FOMC, right in this area. So what does that mean? It means that 40.50 is now on deck. So the upside, any move to the upside is likely to target 40.50. The high of the overnight session is 40.3375. And then as we push through, we start to see resistance. We're likely to start seeing resistance in the 70, 40, 80 area, which is where we went on the FOMC. If buyers continue to be in control, that FOMC high becomes a key target and very likely to spike through and take out some some of the shorts, the lasting shorts up there. So this is where we are today. If we move down, I expect, look at this, boom, and low volume node, any move towards 4,039.95 is likely to be bought. That's the expectation. So if you're short because you have a short setup, which is fine, make sure you're banking some profits in the prior to the settlement price, prior to 4,000 and prior to 39.95. Okay, that's likely to be at least temporary support as we come into that area. Looking at the NASDAQ, so today, generally looking to buy any pullbacks. That's the idea. NASDAQ, let's go back to the TPO chart for the NASDAQ. NASDAQ is actually looking at the same thing. The NASDAQ never let go of its upper bounds. The NASDAQ's really gunning for that that FOMC high. So the NASDAQ really wants to push into the level that we put in up here at the FOMC. So it's 13,000, 13,100 is what's on deck. Again, the NASDAQ, same idea. Any pullback into 12,890 down into this 12,850, let's call it 12,850 on the extreme. Any pullback, if you're short into those, you'd want to scale out. These are likely to be support areas. We're likely to push higher. That's what I'm looking for this morning. If it doesn't do that, that would be great. It would give us a better week. If the market tests up and tanks, gets back below Friday settlement prices, which again you see here, neutral extreme high in the NASDAQ, very strong close, weak high, expected it to push higher in the overnight session. If we push through, this is going to be surprising to many players, and we're very likely to start squeezing. This is a strong indication of weakness. This is not what's expected, so I'm looking for it to get supported in the 13,000, 12,890. If not, 12,850 on the extreme. If it doesn't get support there, then the NASDAQ longs are likely to be in trouble, and you don't want to be long in that situation. Crude is really ramming through. Crude has done some pretty interesting things. Crude finished weak the other day after chugging along from the low of 65 or so, near 65, putting in these higher lows. And then last Friday, it opened in a large gap lower, but it finished relatively strong. And crude looked like it was done testing to the downside. So it came all the way down here and poked higher, and the expectation for crude is it's likely to continue to challenge the high here, which closed the gap, and then to continue to move through the 72. The 72 is key here, the low volume node, 72, and then back to 77 we go. Once we get through the 72, 73 area, 77 is the expected. Okay. I know that covers a lot. It is Monday. There's a lot to cover. But today, remember, on the open, on the S&P, likely to be relatively choppy. When I look at the relative delta in the S&P, there's a fair amount of support here. The three lines are mostly positive. I'm expecting buyers to have strength. I'd love to have a surprise there, but currently across the board, except for the NASDAQ, the crude has been strong all night. Crude is having a bit of a pullback here on the open, but the ES is very likely to retest. Any push into the 4,400 is likely to be supported. Okay, good luck today. Oh, by the way, I want to make sure you knew this Wednesday I'll be on the monthly futures radio show. We're going to be talking. We're going to have some macro visitors on board. You have the information pinned to your live chat. Go to edgeclear.com/deli. Wednesday at 12 o'clock, 11 o'clock a.m. on Wednesday, Eastern U.S. time. The giveaway closes. The giveaway is for 2 10th generation iPads, and then the discussion is going to cover what is happening in the macro picture with Bob Elliott and Tavi Costa. Should be pretty interesting. Check it out Wednesday. Don't forget to enter the drawing by 11 a.m. Eastern. Good luck.